Let's get an overview of financial markets. So, first off, read this disclaimer carefully. Let's look at the newsletter. So, let's get some of the highlights. The doom and gloom portfolio is the best performing for the week at 2%, the month at 12%, year to date at 22%, and even over the last year 14%. So the bears are having a good time. The stock market overview lost minus 2.53% for the week. Country ETFs lowest performing for the month, minus 22%. Also year to date, minus 32%. Also for the last year, minus 31%. Also for the last 3 years, minus 26%. So things are really bad in the stock market, but there are obviously opportunities, and I will show you this throughout this video. There are always opportunities. If we look at the individual performers in the market pulse part, because this newsletter is divided into 4 primary parts. Crude oil had a huge week, up almost 35%. The problem with this rally is that it was based on Trump. He made some comments that there's a deal on the table. It seems like he is talking about a different table than Saudi Arabia and Russia, because they did not confirm the deal. So yeah, there's good reason to think that the gains will be short-lived. Lean hogs had a bad week, minus 31%, the biggest loser. If you look year to date here, of course, I can't talk about everything in this newsletter, it would take forever. So let's look at year to date. Volatility index, biggest performer, 240%. Gasoline RBOB lost minus 58% year to date. Yes, that is not good. If you look at the entire newsletter, every single thing, crude oil, the winner for the week. Second site, medical products, huge loss here of minus 64%. Year to date, the volatility bull 2xETN, highest performer at 483% gain, So yes, there's always a bull market somewhere. The biggest loser is the oil and gas bull, leveraged ETF, losing minus 99%. That is a loss. If we exclude the leveraged products and look at year to date, volatility index, biggest winner, same numbers of course. The biggest loser is Whiting Petroleum, losing minus 96% year to date. So that company is in some serious trouble. So if you go here to stock market overview, so let's see at some things that stick out. In this part, you can basically get the summaries. So I have this advanced formula that shows us who's the winner and the biggest loser. So China, Hong Kong is actually the best performer for the week. So that's interesting. Almost 3% gain. So yeah, that's something we should keep our eye on. So there could be some real opportunities in China. The volatility index, it lost, but not that dramatically. It still is quite elevated. Year to date, Latin America is the biggest loser here at minus 50% plunge. So a lot of red here. If we go to country ETFs, then Saudi Arabia is the biggest winner for the week, 10% gain. That, of course, has a lot to do with the bullish news about a possible deal, but that deal is not looking that it's not that clear anymore. So if you go to Brazil, huge loss, -8%. Year to date, Switzerland is the best performer here at -14%. Still a loss, but -14 is far better than Brazil, which has lost year to date -54%. So you can see that there were some other green spots as well. You can see here Chile had a bullish week, Canada, Denmark, Norway. Of course, you know, I come from Norway, and we do benefit from a rise in the price of oil. Finland, Russia, some of the countries, you know, you would expect to benefit from these news. So here's the doom and gloom portfolio. The year-to-date gain here is 22%. That's pretty darn good. Only the bearish China ETF lost this week. The other ones had, you know, a nice gain average share of 2%. So the bears are having a great time. If we go to fixed income, you can see that the 0 to 5 year floating rate corporate bond ETF, it rose 2%. The high yield was the biggest loser. Year to date, the 20-year treasury bond is still the king at 24%. Emerging markets bond is the biggest loser, -16.55%. So you can see like this is basically the green zone here, where there are gains. And blue is when there is a huge gain. So let's go to the Forex market. The biggest strengthening was US dollar strengthening against the South African rand to a whopping 8%. If that is, you know, we also see this strengthening against South Africa here on the year to date at 36%. So yes, there's always a bull market somewhere. So overall, the message is that if we look at, you know, the categories here year to date, the US dollar has strengthened quite significantly. However, it has weakened a bit against the Japanese yen and the Hong Kong dollar. So that's something to, you know, to take note of. Let's go to natural resources. Okay, crude oil had a big week. We know that. Also, lean hogs had a bad week. Year to date, orange juice is still the big winner, 15%. Gasoline RBOB, huge loss at -58. So let's, you know, if you compare like green energy to fossil energy, then you can see that, you know, there is a loss here for the green energy, but, you know, significantly better than fossil fuels. So of all these green energies, I'm definitively most bullish on solar energy. Because, you know, like uranium, that's like, it's a bit too unstable. Sometimes there's these disasters. Wind is unsightly and noisy, that's a problem. If we go here to some precious metals, you did see some pullbacks, but the year-to-date performance here for gold is still pretty darn good at 8%. So, and palladium almost 11%. Here we have the specific strategies. Year-to-date, the market-neutral Momentum Etf is still performing extremely well at 23% gain. It is such a shame that the assets under management is still, you know, quite small for this ETF. It should be a lot more given the performance. Also the anti-beta, I mean, this is really good performance. People should take notice. I think the problem is that the fund managers, they have simply not done a good job marketing the ETF, because marketing is, you know, pretty darn important. But yeah, performance is amazing. Another interesting ETF that I have included here, that's this one from Invesco. This is the ticker. So the great thing about this ETF is that of course, the S&P 500, that's like in the background. However, it also uses downside protection strategies relating to, I think it was the wicks. So that's really good. So the year-to-date performance here for the hedged S&P 500, 2%. Okay, not amazing, but that's 2% gain. Let's look at the actual S&P 500. That's this one. Okay, minus 23%. That's a huge difference. So, yes, and you can also see some other gains here. Global natural resources, put right strategy. So let's progress to sector ETFs. So here you can see, well, let's get some of the highlights. So if we look at the groups, energy is the winner for the week, real estate is the huge loser. Year to date, technology, well, it is the highest performing, still a loss though. Real estate is the worst performing. And there are many reasons to be rather bearish on real estate. If we go here to the individual items, shipping actually had a very good week, rising above 15%. So that's an industry that's really been beaten down, where there could be some opportunities. Year to date, decline of the retail store ETF, best performer at a whopping 64%. That's good. So here we have the basic materials. Precious metals, best performing. However, interestingly, the junior silver miners is the lowest performing. So that's a very interesting divergence. You can see here that the gold miners had a good week, 2.38%. So there is certainly something happening here in the precious metal category. If we go here to consumer cyclicals, then you can see that this ETF, it really dominates. That's because it uses a bearish strategy. But decline of the retail store, it is a huge theme and something that it's a very powerful trend. Another powerful trend relating to retail, another way to play it is to use the Clicks ETF. That one is bullish online but bearish brick and mortar stores with a 12% year-to-date gain. Financial services, trading systems, that ETF lost the least. Peer-to-peer lending and crowdfunding, the biggest loser. Year-to-date, global IPOs is the strongest performer. Regional banking is the worst at minus 49%. And here we go to the real estate, where you can see a sea of losses, some of them also really deep. Like for mortgaged real estate, huge losses. Also premium yield REITs. So for a long time, REITs were considered, to be, it's safe, but no, apparently not. Interestingly, China real estate is the highest performing for the week, the month, year to date, and the last year. That's interesting. Consumer staples. So the consumer staples, the XLP ETF, it is the highest performing year to date. Agribusiness, biggest loser. Healthcare. So you can see some gains here. Immunotherapy, medical devices, and also more general healthcare. Utilities, water resources. Let's go here to communication. So 5G, strongest for the week and the month, while general media is the lowest for the week and the month, but also year to date and the last year. So definitively some problems with this one, which is the PBS Invesco Dynamic Media ETF. Here is energy, a bunch of red, but big gains for the week. But these gains are really threatened now, given that the news are in trouble. It seems like, Trump was, shooting a bit from the hip. Here are the industrials. The only one with a gain was shipping. Huge losses here for global airlines. And also the space exploration ETF, which is a new, very interesting ETF. In these places where there's huge losses, like airlines and shipping, that's also where you can find some good deals. So look, at the companies that are most likely to weather the storm, and you can get the stocks while they are really low. And then we have the final sector, technology. China, here again we see a gain from China. That is interesting. That is pretty darn interesting. So, this is definitively a country to keep your eye on. If you look at the year-to-date performance here, the best performance in the technology space is these two China ETFs. You could of course make the case that China is very likely, not being honest about the numbers when it comes to the contagion in China. But then again, they do have a political and economic system that, with ruthless efficiency, can handle problems. There's obviously issues when it comes to human rights, but from the perspective of efficiently solving a problem, they do actually have a superior system. And it shows in where people are willing to put their money, which is a pretty darn big deal. So here are the thematic ones. Blockchain is the best performing for the week at 12.37%. Cybernetics and Bionics, the worst, performing at -17. Year-to-date, Interactive Entertainment is looking at a 1.65% gain. Cold value stocks is the lowest, performing at -57.54%. And here you can see all the themes, A to Z. So for the week, gains in the blockchain, Interactive Entertainment, the International Investor, Toxic Energy, and We Love Our Pets. So if you look at the individual items, Diamondback Energy, even though it's lost a lot, when there is some good news, there's a huge move, so 32% for the week. That's really good. Teladoc, looking at an 86-ish% gain for the year-to-date. And Whiting Petroleum here, big loss, -96. So here we have artificial intelligence. Let's move these a bit, like that, because then you can easily see which is the best and the worst performer, like that, or maybe a bit more. Okay, like that then. So Xilinx, week, month, best performing, Splunk, the opposite. But artificial intelligence is, a strong theme, from like a long-term perspective. Batteries and cordless electronics, -34% year-to-date. Biometrics and cybersecurity, some big moves here in biometrics, Aware, and VeriSign cybersecurity. There is blockchain, so a lot of green for the week. And also some interesting moves here in Ethereum and Monero for, year-to-date. Clean energy, -25%. Cold value stocks. Houston Wire and Cable, 10% for the week. Support.com, year to date, minus 4-ish. Cybernetics and Bionics. So this is a very interesting theme, but there's a lot of uncertainty in this space. This is very early, so we have some huge losses. But long term, there will definitively be some huge winners in that space. Here are the ones that have seen devastating sell-offs. And it is a very interesting theme because when there are moves, they can be quite big. There is discount retail. So when people have economic uncertainty, they downgrade, and there's been some interesting moves. So looking across multiple time frames, Walmart is the winner here. We also got some big moves here in Big Lots, and Costco, which is only has a minus 1.8% loss year to date. Dividend Investor, e-commerce. I mean, of course, we cannot go through everyone because then the video will be very long. Education Disruptors, Environmentalism, Plug Power, 6% year to date. Femininity, Percy, best performing year to date, minus 5%. Financial Technologies, Virtue Financial, strongest year to date, 42.53%. Genomics, Nanostring Technologies, highest performing at minus 16% year to date. Interactive Entertainment. So you can see that there were quite a few movers this week. Like almost everyone except Glue Mobile and Zynga, which are both in the mobile games category. So that's rather interesting. So the Interactive Entertainment has a gain year to date here. So that's interesting. Internet of Things, minus 23% average year to date. Masculinity, minus 29%. Harley Davidson is having a rough time. And also, Polaris Industries, which is, both of these are, very, very much discretionary spending. And then you have the military industry. So, nuclear power, BVX Technologies. Then we have the other themes. So let's move this one again, like that. So here we have, the most hated industries. So Peabody Energy, which is in the coal business, they have a gain. Nutrition and Fitness. United Natural Foods, 6% year to date. Online video and audio, huge theme. People are streaming a lot nowadays. So Netflix, it has a gain for the week and also year to date. So that's interesting. Patient Independence. So you got Massimo with gains across multiple time frames. Teladoc, is the king of them all. Huge performance over all time frames, though it had a bit of a loss for the week. Portable Energy, powerful trend. Processing of information. So Intel and Broadcom, gains for the week. Robotics and Automation. Self-driving vehicles. Tesla, the only one with a gain year to date. Shit hits the fan, buy precious metals. Social media. Match Group is the strongest across all time frames. Space exploration. You see that Aerojet Rocketdyne, strong across multiple time frames. Surveillance and security. Here you can see nice systems shining. They are into mass surveillance, so yeah. But there is obviously some gains in that space. the international investor, you can see that Taiwan Semiconductor has been losing across multiple timeframes. Luxury and opulence, Tiffany and Company, highest performing across most timeframes. Here we have the tiny challengers, everyone losing for the week, for the month, and year to date. Here is toxic energy. So in the nuclear energy space, that's where you saw the biggest moves here. Whiting Petroleum, damn, it really looks bad for that company. But if there's any positive news, you can see a huge move though. Here are the underdogs. Only Kraft Heinz looking at the gain. Kraft Heinz is also actually the best performing year to date. We love our pets. We got some nice gains here. Certainly outperforming the overall stock market. Here are stocks with weak statistical correlation with the VT ETF, and it shows the year-to-date performance. It is a loss average, but minus 7.47% is still much better than the S&P 500. And then we have finally the workplace disruptors, a very mixed bag, some big gains, but overall there's been a huge loss for the week, the month, and year to date. Then we go to the leveraged ETPs. So, bearish miscellaneous is the highest performing category at 7% for the week. Bullish subsectors, the biggest loser, minus 16%. Year to date, bearish stock market, year to date performance of approaching 58%, so that's a big gain. Being bullish subsector has been a very bad idea, year to date minus 80. Individually, you can see that the real estate bear, minus 3x ETF, it rallied almost 24% for the week. Home builders and suppliers, bull, 3x, lost, minus 42%. Year to date, volatility, bull 2x ETN is the strongest performer, and oil and gas bull, the biggest loser. So let's speed through these ones. Then you can stop the video and look at what you find most interesting, because I do want to keep the video at not too long. So bearish countries, huge gain. Big loss here being bullish sectors. Bearish sectors, 53% year to date average share, so huge. So, and you can always, of course, stop the video whenever you want. Bullish fixed income also. Big gain. Yeah, bearish natural resources, like that. And here we have bullish miscellaneous. We do have a gain, but that's because, the volatility products have, had these huge moves. Here is bearish miscellaneous. So all of these have an average 29% year to date. So there's been some big gains out there in different spaces, so it just goes to show you that if you look more broadly, you can always find opportunities. Whatever you do, of course, you want to let the trend be your friend, and have a good week.